Good afternoon to you. It is Talk Erie and the Joel Natale Show, live from our Kingdom Financial Group studio here at 5th and State. And once a month, we get to talk to our friends from Hilling-Pfeffer Insurance. Alan Hilling, Chris Hilling are here from Hilling-Pfeffer Insurance. Welcome, gentlemen. Again, you made the walk over. I love how that, we're all in the same neighborhood. You know what I mean? But today we want to talk about car insurance, where it's at, and maybe kind of shed some light on folks' lived experience with their car. People have a love-hate experience with their car insurance, don't you think? Or
yeah, absolutely.
The past couple years, I think it's been more of a hate relationship, especially when it comes to prices specifically. Yeah. But some exciting news that we have this month is that Erie Insurance released their new auto policy in Pennsylvania, and we've had some positive results so far. Specifically, we are seeing very, very competitive rates. What hasn't changed is the great coverage and the claim service that you get with Erie Insurance. That is still the same. It's the best in the industry, but the rates that we are seeing for new customers and for some of our existing customers is very positive.
It's interesting, Alan. Again, you've been in this business a long time. You don't think of insurance as products, but basically they crafted a service approach. Mm-hmm. And what kind of new things are in there to try to be more competitive, would you say?
The rating at this time, it's so, what would you say, Chris? Detailed?
So it's very detailed. I think who has really set the standard with how auto insurance pricing is Progressive. They use a lot of data points, and we're seeing other carriers, other insurance companies are doing that now, and it is resulting in better prices, especially if you are someone who has a good claims history, don't have a lot of violations on your record in the past 3 to 5 years, you have a good credit score, you are going to get a very competitive price.
Okay, all that you just said, Chris, I bet you most of my listeners don't realize that all goes in to what your quote's going to look like. Would you agree?
Oh, absolutely. Yeah, we have customers call all the time. Well, what's making my rate hike? What's causing it? And you give them the rundown of the different data points, like Chris said, and then it starts to make sense to them.
Yeah.
Yeah.
So let's pick up with credit rating. Again, young person. Let's say if there's 25, maybe they just went over that magic age of 25, right? Mm-hmm. But it's hard to build credit even by 25. Mm-hmm. Are they going to just basically always have an elevated rate if they try to get their own car insurance?
Some companies will give them the benefit of the doubt. If they have, I guess, what we would call a light credit file, mm-hmm. you might not necessarily get hit for that. What I generally see is that if someone does have bad credit, they're going to see that reflected in their price. So there is, I don't know, I don't know what you think of that, but I think for someone who has a light credit file, they don't necessarily get punished for it.
Correct. I agree with you. Yeah. Okay.
What about, though, vis-a-vis claims? So let's say you have not a great credit file, but you're claim-free for the you're an older 30-something or 40-something, and you're mm-hmm. claim-free. Doesn't the experience outweigh maybe a bunch of credit cards or whatever goes into that credit line? It's all part of a mix, huh?
It's all part of the mix. Yeah, we see people that have their claims free, good driving records, and they have some credit issues, and their rates are higher for the individual that has better credit.
I tell you what, that's a huge learning for people, isn't it, Chris?
Yeah, and something to keep in mind too is insurance is regulated at the state level. So every state does it a little bit differently. In Pennsylvania, it's factored in. In other states, it's not so much. I believe in New York State, it's more restricted on how they can use your credit scoring for pricing. So it really depends on what state you live in. But here in PA, yes, it is part of the equation.
You also mentioned a pretty clean claims record. What is that entitle? If you hit a deer, if you have a comp claim, does that necessarily ding you for your overall rate, for example?
Depends on the company. So Erie Insurance, who we were just talking about, I believe they give people more leeway if you have had what I would consider a null at fault claim. So that could be a comprehensive claim like hitting a deer or wind and hail damage to your car. It even goes so far with some new customers that we quote where if they can show us, hey, I did have a collision claim, but say I was rear-ended by someone who didn't have insurance or it was a hit and run, they will give you the benefit of the doubt. A lot of insurance companies will do that as well, but I do see some that we work with where if you do have those comprehensive claims, it does result in a higher rate.
Seriously.
So it really does come down to a company by company level how they handle it.
I mean, it's still, whether you hit a deer or hit another vehicle, you're still dealing with that huge amount of money to get your car back to new again, you know?
Yeah, and you'll see deer loss frequency, where you might have a customer that lives outside of town and they may have hit 3 or 4 deer. Well, that's raising the eyebrows of the underwriter. What's going on? Are they driving too fast, not paying attention? Maybe that's not the case. They're just unlucky hitting the deer, but a lot of times it's from driving too fast.
It's so interesting.
Yeah.
So what else? Like, okay, so we talked about claim history. We talked about credit. What are other kind of defensive moves that a driver can use? I mean, does Erie use those little devices that they plug in for? I don't even understand that. Do you get what that all is, you guys? Yeah. Those little devices? What are they called, by the way?
So Progressive pioneered this program, and they called it Snapshot. And when it started, it was a device. You plug it in, and they measure it, and depending upon your driving data, they give you a better rate for it. Now, it's moved to apps now. You download an app, they monitor your driving, and depending on the company, you will either get a discount when your policy renews, you could get a surcharge with some companies, or you might get no change at all. Erie Insurance has this program. It's app-based. You download it, they monitor your driving, speed, braking, acceleration, cornering, and phone use is what they look at. And those metrics are pretty standard across the industry. Theirs is a rewards program. If you hit a certain score, you get $2.50 every 2 weeks. If you get above that, you get $5 every 2 weeks. Most other companies do a discount. Erie Insurance is rewards based. Like Progressive, for example, they give you a discount up front, and then they'll give you a discount after the monitoring period, which is 90 days.
Have you noticed that it particularly changes driver behavior when they know that kind of somebody's watching?
That's what the insurance companies tell us.
They're telling us that, yeah.
Yeah, their data is saying people who use these devices drive better.
Do you use it?
I do. I use Erie Insurances, and they give you, with speeding, they give you a little bit of leeway because they assume not everybody's always going the speed limit. Sometimes traffic flows a little bit higher, so you can go 8 miles over and not be penalized for it. And I find myself now automatically I don't go any higher than 8 because I've been using this app for so long.
Yeah, changing behavior. Well, I mean, again, it's mitigating risk, right, Alan?
Yeah.
I mean, that makes a lot of sense to me.
I got my wife a $100 Starbucks gift card for Christmas from the app, so I think it paid off.
I would say you really knew what to buy, didn't you, Chris? That's amazing. Again, what else do we need to know? With this new product here, is this something where a listener should maybe connect with their agent to say, "Hey, let's just do a comprehensive look on my car insurance," and the other thing I want to talk about is bundling. The impact of bundling has on your rate.
Oh yeah.
Yeah.
First question, they should reach out to their agent.
Yeah.
Keep in mind, we are getting bombarded right now.
Why is that? Why right now? Because of the new product? Okay.
Yeah, with the new auto rates. If you can sit tight to your renewal and talk to them close to your renewal, and you want to be out there 30 days out in front of your renewal, because that's when you get a pre-quote discount. So you want to be talking to your agent about 30 days ahead of time, because that's going to give you a nice discount looking at your renewal. And if the new program is a fit, it'd be a good time to make a change.
Yeah.
Yeah. In bundling, yes, if you have a home policy or tenant policy, or consider life insurance. If you need life insurance, those are big bundles. Yeah.
And basically you're bundling with the one carrier, right? So you guys would say, okay, here's our Erie bundle we're going to offer you.
Right. As much as we can, we try to bundle with one carrier.
Yeah. Do you find that people are starting to understand your industry better, or do we still need to do a lot of education about, especially home, life, auto,
I think the education piece is still there. I've noticed the past couple of years, because rate increases have been so prevalent, customers are more aware of it. So they are more informed, I think, than they have been. But still, there's a lot of things that come up, and homeowners insurance is a good example where there's coverages you need to add to your policy, like sewer and drain backup, like service line coverage, extended coverage on your roofing and siding, where most people would just assume, oh yeah, I have that. It came automatically, and it doesn't come automatically. So there is still a big education piece to it.
Yeah.
Does it happen often where somebody will submit a homeowner's claim and you're like, sorry, but you're not covered for this, do you encounter that?
Yeah.
We try to avoid it as much as possible by taking care of it on the front end, reviewing coverages and adding and recommending them.
But stuff has changed. I mean, things like identity theft, and what are some of the other stuff that's just come down the last 10 years,
Siding, roofing, restoration, okay? If part of your roof blows off and they can't match the shingles, well, you look out there and see houses that might have a quarter of the roof a different color than the rest of it. That's because that's the only part that blew off. If you have the siding restoration endorsement, they'll give you up to $10,000 to replace the rest of your roof. Okay, and that's a big one, because if you bought your homeowners, 20 years ago from us, and have just renewed it, and been happy with your coverage, you probably don't have that coverage. And you want to be talking to your agent about that. The underlying line coverage. That is very important. It's the same thing.
What does that mean? What's underlying line?
Like your service lines that are underground.
So like your water? Because God forbid you ever have a water break. I mean, are you saying that would cover that?
Yeah.
From the point of presence in the street to your house? Is that what we're talking about here?
Right. Yep. The part of the line that you're responsible for. So it's water, sewer, and gas for most people in Erie. You have coverage for it. You have to add it, though.
But that's a rider that you add.
Right.
Okay.
For people living in the city of Erie, I think it's very important, because I live in the city. We have very old service lines that it could happen at any time.
Yeah.
And
What's it cost to dig one up?
$10,000. Every claim I've had was a minimum $10,000.
Yeah.
Yeah. Wow. So, and then, like we said, identity theft. I don't know. At one point, Erie was offering some kind of a plus coverage, like $50. Can you talk about that?
Yeah. So they call them bundles. They have the plus and select bundle.
Yeah.
The plus bundle is where you first get service line coverage. That's where you first get the roofing and siding matching coverage that my dad mentioned.
Yeah.
And then the select bundle, you get those, but at a higher coverage limit. And you mentioned the identity theft coverage. It goes further, where it gives you not only the fraud reimbursement coverage. So say someone tricks you into wiring money out of your account, which we've had those claims.
Yes, we have.
That's covered, but also cyber liability as well. So if you were to get sued for some type of information that was taken from your network, or someone in your family may be doing something, you have some coverage for it on your policy.
So how often then, again, when you talk about home, auto, life, right? How often should you really kind of sit down and look at your portfolio? I mean, it seems like when you're making a financial plan, you should be making an insurance plan, right?
Yeah. Yeah, absolutely.
Yeah.
I mean, you think about what you talk about with your financial advisor, your investing guy. Insurance is super important with all of this.
Yeah.
It is. I would say two times. Life events. So we talk to our customers when they buy houses, when they buy new cars, when they get married, have a child. A lot of times when they buy businesses too. We have a lot of customers who buy personal and business insurance from us. But besides those life events, I don't know, maybe every 3 to 5 years. It's good to review your policies, call up your agent if you haven't spoken to them.
It's interesting too, Alan. Again, your kids have started to grow, right? They're grown, right? Isn't that a kind of an interesting for the parent? Say, okay, my kid's 26. He's no longer going to be on my health insurance. I mean, there's a lot of things that happen as they get through those middle 20s. They start getting married. They're going to get their own stuff. How do you navigate that as a parent?
Boy, it seemed with the health insurance.
Well, with just anything,
Yeah.
with all these different changes, you have to get your own thing now. You have to get your own life insurance because you're no longer. What is the life insurance goes off at what 21?
Health insurance was what?
Health is 26.
26. Yep.
I think life. I think if you had a child policy,
Child rider. Yeah, I think it's 21.
is it 21? Yeah.
21.
I mean, these are all things that we deal with when they start adulting, right?
It is. In my house, so the boys all went to college, and they called it the bubble. Chris nicknamed it the bubble, and he told his younger brother, stay within the bubble as long as you can. Once you're out of college, you got about 6 months, stay on the cell phone plan, stay on the insurance. Then after that 6 months, it's okay. It's time to start getting off on your own. So Chris would always joke with him, stay in the bubble.
Because it's expensive, Chris. I mean,
Yeah,
again, that adulting thing, right?
Yeah, it's funny because my auto policy renews December 1st, and I graduated in May. So it was about 6 or 7 months that I was in the bubble, and then it was time to go get my own stuff.
Yeah.
But we were talking earlier about factors that affect your auto insurance rate. For young drivers, a lot of companies will give you credit for being on your parents' policy. Because I get that call from customers a lot where they will say, hey, should I set my young driver up on their own policy?
Yes.
Usually it's more expensive to do that
100%.
up front. And what we always tell them is, hey, it's usually less expensive for them to stay on your policy. A lot of parents will have them contribute to the cost of the insurance, but you get credit for it too. And it's important, in the long run when they go off on their own. But I've noticed this started in my generation, I think, is a lot of kids just would not get licensed. And they waited and waited and waited, and that did hurt them when they later went to get their own license and insurance, because you're like 25, never been insured, never had a license, and the rate is crazy.
Wow. Never been insured. And yeah, right, because you don't have any kind of record, do you? I know this is inside baseball, but do you need to have the car, like the kid's car, in your name to be on your insurance, or no?
Yes, you do.
You have to have the title in your name. Okay. Just heck.
Yeah, that's a big one. Yeah,
is it a big one? Yeah.
Yeah, it is. But when the kids are 16, typically the car's in the parents' name
Right.
anyway.
Yeah.
Then they might buy a car when they're 22, 24, and I'm going through this right now. Erie Insurance had this rate lock program where you could lock your rate in. I have a family that's been locked in since 2022. Now, the kids are now coming off on their own. And it's being driven by the one child buying her own car, getting the car in her name, which is causing their policy to go up in price because it's a new rate. It's been in the old rates for so long, even a change coming off is causing the rate to go up, which is causing the older son to say, well, since we no longer have rate lock, I guess it's time to get my own too.
Yeah.
So this is a whole event that I have going on.
So you have all those events as the kids grow.
Yeah.
I want to, before we run out of time, I want to talk about the upper end and those 60 plus, 70 plus that are just driving less. Maybe the car is older. Is that a time to review and say, hey, maybe I don't need I don't need to be 14,000 miles a year. I'm only driving for, that kind of thing. What do you think?
Yeah, you should review that with your agent. We're seeing, I'm just thinking of Erie Insurance's new product. Lower mileage drivers do get a better rate. That's not unique to Erie Insurance, but the new product emphasizes it. And most companies now, they ask about that. They ask for an estimate of your annual mileage. Now, I will say, I just had this with Progressive, where they will provide what they think is their estimate of your mileage, and if you try to fudge it, they will ask for proof.
Oh, okay.
So you got to be honest, but
Sure.
you will get credit for lower mileage.
But they can check it now with the DMV. They can check how many miles you're doing when you. Yeah.
Absolutely.
Yeah.
On your that all that is public knowledge now. Oh my gosh!
All those
what
data points.
what they know, right, gentlemen? This is
though, when
yes.
you're 70, was it 75? Your rates start to go the other way. So they'll start to go up because
I
they see
didn't
the
know that.
older drivers having a few more accidents.
75. That's when you start wanting to evaluate
Yeah.
how much you want to put on the road.
And they can take what's called 55 Alive Driver's Course, and it is very good. I believe you can do it online now, right at your house. Take the course, and it saves you 5% on your insurance for 3 years. Then you take it again. And we have a lot of seniors that take advantage of that program. And I'm telling you, we get a little bit of pushback, then they take it, and we talk to them again, and they say, you know what, it was well worth it. There's a lot of things I've forgotten. So
That's
AARP
tremendous.
offers it,
Yeah.
right? AAA offers it. So there's several sources to get the class from.
yeah.
I think that the takeaway is might be time for a review of your policy with your agent. How do folks get a hold of you guys?
Our number is 814-870-3109. We're located at 332 Holland Street, Hilling-Pfefferinsurance.com.
Beautiful. Alan Hilling, Chris Hilling. Gentlemen, enjoy our times. I appreciate it very much.
Thank you.
Yeah.